In 2011, we saw peaks in the value of gold and silver. We were in the midst of a recession, and people were flocking for safe havens like gold and silver. That gold and silver rose. Well, a lot of banks missed out because unlike the Hunt brothers in 1980 where they were trying to corner the silver market, it was a lot of individuals buying gold and silver. So they started issuing a lot of gold and silver notes and drove the price back down. And basically, buying gold certificates on paper is not advised. A lot of gold that's mined goes to the London Exchange. So let's say you have 1 ton of gold at the London Exchange. They would be expecting more gold arriving, so they could sell 3 tons worth of gold notes or silver notes for that 1 ton. Consequently, when you want to go and redeem it, there may not be enough gold around. So it's much safer and secure to buy physical gold and silver. Now, when you want to buy gold and silver, when they sell paper notes, they manipulate the price. So yeah, a lot of people are buying and China is buying gold in record numbers, but if they keep the price low from all this price manipulation, it could go down even further before it goes up. It will eventually go up as currencies collapse. All these different countries are printing money and they're no longer backed by gold or silver, whereas China has been buying a lot of gold and silver, and they'll eventually revert their currency back to the gold standard, and then it will be the dominant currency and the dollar will collapse. Well, so what do you do when you want to buy gold, since the price in the meantime could go down or it could go up? Or it will eventually go up, and in the meantime, it could drop even lower. You have different types of ways to buy coins or gold and silver. You have bullion, and bullion comes in bars or rounds. And then you have rare coins, and also junk silver and gold. Now, when you buy bullion or junk silver, and when I mean junk silver, I mean older silver coins which are so worn out that a coin collector wouldn't pay a premium over the value of the silver for it. When you buy bullion and junk silver, the value is going to go up or down based on the market. When you buy rare coins, let's say you have a gold coin that has $300 in gold, and you buy it and you pay $350. That could be the collector's value on the coin. Well, naturally, as gold goes up, the price of the metal in the coin is going to trump any collector value. But what if gold goes down? Let's say gold becomes $250 an ounce. This also will drop a little bit in price because the coin market, like other markets, also coins will fluctuate in price. Sometimes they go up, sometimes they go down. Naturally, key dates and stuff, extremely rare varieties tend to go up over time constantly. But if gold dropped and this coin dropped, it could drop to 300 or 325. But the thing is, you still have the numismatic value tied into it, so that could still go up even if gold goes down. So a way to be safe is, rather than buying bullion or junk silver, focus on rare coins where their price is not limited strictly to the price of the metal within it. And you want to find the ones that are very close to the value. Let's say you buy a variety, let's say it has $300 in gold, but the collectors will pay $400 or $500 for it. Well, that's nice, but if you're focusing on the metal versus the collectability, you want the cheaper varieties that are closer to the metal. Now, if you find a rare variety where it has $300 in gold, let's say, but it's worth $1,500 or $2,000 because it's a rarer coin, that is still a good investment if you can afford it. So this is my advice when it comes to investing in physical, tangible gold and silver. Focus on the coins and focus on the ones that are closer to the intrinsic value of the coin rather than paying a hefty premium for the numismatic value.